Split deck. Following the rule. Okay, cool. Right, let's go then. Let's talk it through. So this market breaks out of the support level. You are now short. You have sold this market. Nice breakout. There is a possibility that this market is going to come up and this support could become resistance. That is a 50-50. You cannot place a stop loss based on the assumption that that might become resistance. Okay, that's a risky business. You have to accept the fact that this level has been broken, and therefore there is a possibility that this price is going to do this. Okay, if you place your stop loss here, it is a very aggressive stop loss. This white stop loss is far too aggressive. You're going to get taken out of that trade before giving your trade the opportunity to really move lower. Okay, so white is too aggressive. If we go to green, at this point in time, you're losing money. The chart is coming up. It hits your green level, it hits that stop loss and takes you out of the trade. What would be the expectation when you hit this resistance level? Would you expect it to bounce off of it or break through it? Would you expect it to bounce off or break? You'd expect it to bounce. So if you just got stopped out at green, you are going to be pissed off, because then it's going to do this. But by that point, unfortunately, you've been taken out of the trade, it's hit your stop loss, and you've lost your 1%. So orange. If you go for orange, you are going to be even more pissed off. It is going to clip the level where you expect it to bounce, which is going to take you out of the trade, and then, of course, this market may continue lower. Okay, we are always going to place our stop loss behind a safe level, an area that can be defended. If you are a seller, the point at which you decide, no, I was wrong, was when the resistance is broken. You must allow the market to do this. Come up, test that resistance level, and then continue lower. It would be lovely to think that every trade you take, it's just going to go straight onside, and it's just going to do this. But that is not reality. It's not going to happen. So you have to accept the fact, yes, fine, you're nervous, you're losing money at this point, but provided you stay behind this resistance, which is sellers, you are still in this trade and you are safe. Okay, so our stop loss when we sell is always going to be above valid resistance. Okay, which in this instance is the red level up here. Okay, that is a safe position, out of harm's way. If resistance breaks, then fine. You are fundamentally wrong about this trade. Get me out of there. Nobody chase red. Okay, let's go then. So we're now going to target. Okay, now I think that's probably those of you which have some experience in trading, the biggest mistake you will make, and everyone does it, is you get far too close with your stop loss. You get super aggressive with your stop loss because you want to get nice, quick profits, big profits. But the reality is you don't live in that, you don't survive the trade long enough to ever realize any profits. Okay, so targets then. I'll give you a few options. You've got red. So now we've sold it, we've placed our entry, we've placed our stop loss. You've got red, orange, green, white, red, orange, green, white, purple, or light blue. What do I reckon? Targets. Red, orange, green, white, purple, or blue. Red, red, red. Reds across the board. Perfect. Good stuff. Absolutely. Okay, we're now making the assumption, right, this chart is grinding lower. Okay. As we get down towards this support level here, the expectation is that it will bounce off of that support level. We have to just execute what's in front of us. We can't just make the assumption that level is going to break because we want it to. The reality is last time it bounced, so this time it will bounce. Yeah. We don't want to put our target right on that level, because again, if you go right on that level, it's a game of fine margins trading. The price might come up just short of that level and then go the other way. So we're going to trim the fat. We're going to just take a little bit out of it. We definitely don't want to target beyond. We definitely don't want to target beyond the level, because then it's going to turn and bounce off the support level and you're never going to hit your target. Yep, so we're going to give ourselves a little margin for error, and we're going to bring it just inside the next support level. These ones down here are all out of reach. Okay, very good. Okay, so our limit, our target, however you want to term it, is going to be above next valid support. Okay, above next valid support level. Okay, lovely, great, very good. Now, that has determined the risk-reward ratio of our trade. It is a 1.5 to 1 risk-reward ratio. We have no say in that, okay? It's not, we can't just decide I want a risk-reward ratio of 3 to 1. It doesn't work that way. You've got to go off what the roadmap, what the technicals have shown us. The technicals here are showing us a 1.5 to 1 risk-reward ratio. That's what I'm going to do, okay? Once we've got this, then you can go about placing your trade. You can set your entry, you can do your risk, you can place your 1%, you can calculate your size of trade. Remember how we did that? We did that on the webinar on Monday. So in this scenario, if we had a £100,000 account, we're going to risk 1%, which is going to be our £1,000. That's the amount we can lose. We have a stop loss in this example here of 42 pips. I'm going to call it 43 pips, 42.79. Okay, so I can now do my £1,000 divided by my 43 pips, which is going to equal absolutely no idea. Calculator, 1,000 divided by 43, it's going to equal £23.25. That is going to be the size of our trade. I'm now going to sell this market at £23.25 per pip. If it hits my target, it's a 1.53 to 1, so I'm going to make £1,500 profit for a potential £1,000 loss. Yep, it's a 1.5 risk to reward ratio, risking 1%. And that's if we go short. Okay. Right, of course, on the opposing side to this, we then have the opportunity to go long. Okay, so let's flip reverse this. Okay, we now have the opportunity to go long. Entry for long positions. Again, we're going to trade the breakout. Let's turn this green. Entry, in this instance, is going to be above resistance. Then we're going to enter if I break above resistance. Okay, so I'm going to go long here, above that resistance level. Okay, where do you think we may place our stop loss if we're going long? Where do you think would be a sensible place to put our stop loss if we're going long? If you were to describe where you're going to put it, where might you put it? Below the bottom line? Yep, absolutely. Okay, below the bottom line, if we're giving that its correct terminology, we're going below valid support. Yep, so exactly where it is here. Okay, we are only wrong in this trade if the support level breaks. If all the buying gives way from beneath here, then we are wrong. Okay, and then our limit and our target is going to be below next valid resistance. Okay, is that therefore the correct place to put my target? Below the next resistance level. Is my target in the correct place? What do you think? Okay, Yinfei thinks the top resistance line. Why? Why that one instead of where we've got it at the moment? So why? Two options here, aren't there really? You're either long, you're either buying up to that one, or you're buying up to that one.
I think the top line is the resistance line because there are two bands there, and the second top, that one has been broken through.
Broken through, absolutely, yeah. This level here, this, let's just change colour, this orange one, this was a valid support level up until here. That was valid. We then broke through that level. At this level here actually no longer exists. It's not valid anymore. It's been broken. Therefore, no need to target it. Okay, it's not there. We can target to the next resistance level. This is the all-time high in terms of what I've drawn at least. Okay, and is valid, therefore, valid resistance. Okay, so we have the opportunity for this. Now, because of how the support resistance levels have fallen here, the risk to reward ratio on this trade is much higher. Yeah, it's at 2.2 to 1 versus the 1.5 to 1. Okay, that is a more favourable trade. We made £2,300, £2,200 if that trade comes off. Okay, that's of course the more desirable trade to take. We have no say over that. I can't force that. That's just where the levels dictate. It's your call then on which, when you develop a strategy, and of course this is what we'll develop in the weeks to months to come, what is an appropriate risk-to-reward ratio for you? Now, for me personally, I would never take this trade on the left at a 1.5 to 1 risk-to-reward ratio. Okay, it's nowhere near high enough for me. Okay, I rely on quite a low hit rate, but quite high risk-to-reward ratios. Okay, I need to be taking trades which are 2 to 1s, 3 to 1s, 4 to 1s in order for my strategy to be profitable. Okay, so I would say, although it's perfectly valid for my strategy, this left-hand one's not valid. The right one, probably okay. Make it 2.2 to 1, something like that. Okay, but hopefully you can at least see the logic of how and why we're interacting with these support and resistance levels. Okay, let's come back to oil, where we were, and we were on the hourly chart. Okay, if we apply the same logic here, okay, we are going to buy, if we go for a long opportunity, we're going to buy if we break above resistance. Yeah, so my opportunity to go long is if I break above the resistance, which is here. My stop loss needs to be below support, which is down here, and my target needs to be below resistance, which is up here. That now becomes my trade on oil. Yeah, that is my opinion on the levels I've drawn, on the analysis I've done. There'll be, of course, as we go through the program, there'll be a huge amount more analysis and research as to why you take a trade. But at this point, with purely support resistance, that's the trade that's available to me. I could also say, well, actually, I'm going to sell it. If I break support, I'm going to put a stop loss above resistance, and I'm going to target support. What is the issue with that trade? What is the issue with this trade? Yeah, risk-to-reward ratio. Risk-to-reward ratio is less than 1 to 1, one of our golden rules. Therefore, I haven't got the opportunity here in this instance to sell this market. I haven't got the opportunity to sell it because I can't maintain the risk-to-reward ratio. I can't just say to myself, well, I'll just do that, move my stop loss, and now it's a 2 to 1, because then my stop loss is not in a valid position. It's not in a valid location, and I can't do a lot with that. Okay, so this far right-hand trade, not on the cards. Only opportunity here is a long in oil. That's a nice safe stop loss, nice confirmed entry on a breakout, nice safe target below the next resistance level. Okay, in this instance, these two levels are hourly, and our target, our next resistance is a 4 hour. That doesn't matter at all. Okay, that doesn't matter at all. It's just that is the next level. There's nothing else here in the way, so that's where we'll go to. All right. Now, because we've done all of this analysis on an hourly time frame, this is a fairly long trade. If it does something like that, we're going to get there 19th September, 6 o'clock. That's going to be, 2-3 days, something like that, 4 days. So it's a weekend, isn't it? Yeah, it's going to be about 2-3 days, something like that. Okay. If I've done all of this process, let's go to the other asset I was requested was gold. Let's come to gold, and we now said, no, I'm going for a much shorter term trade. Yeah, I'm going to be looking at, where's oil? Back to oil, sorry, where we wrote down the time frame somewhere. There we go. Okay, so that there we looked at a couple of day trade, slightly longer term. We did 1 day, 4 hour, 1 hour. If I'm now going to say to myself, no, I want a nice short term trade intraday, then I'm going to look at the 1 hour, 15 and 5 minute per trade to last for a couple of hours. Okay, so we'll come to gold. Let's get ourselves into the hourly. Okay, this is our hourly world. This is what we're interested in. So let's pick out any key levels. First level's in. First bounce. Second bounce. Third bounce. So hourly level there. Worth just checking down here. So I've got 1 and 2. I need to come back in time to see if there's a third. Break, nothing really there. So I don't think that's got anything in it. So the only level, hourly level, is that support level. Looking at resistance. Quite a lot of bounces there, but most recently we've broken through it. Good bounces there, but most recently we've broken through it. Nothing up through there, nothing up through there. Got to look to this high, come back in time. Okay, this looks quite good. Bounce, break, bounce, bounce. Okay, so let's just crunch the numbers on that. I've got 1 bounce, 2 bounces, 3 bounces, 1 break, 2 break, 3 breaks. 3 bounces, 3 breaks, unreliable level. I'm not interested. Comes out. So I haven't actually got any hourly levels other than that 1 support level at the bottom. That's absolutely fine. You don't need to force it. If it's not there, it's not there. Down into the 15. Again, we're seeing stuff in slightly more detail now. Trying to pick out any other. Of course, gold completely skewed after yesterday. This has not helped the situation. Yes, of course, the CPI data, dollar got stronger. Gold is priced against the dollar, so that dragged gold down with it. Looking at any potential levels through here. Don't think there's anything there. Nothing there. Nothing there. Is there anything up here? No, nothing really up there. So no 15-minute levels. Into the 5-minute now. Very short term. Have we got any levels? No, this is very, very ugly. Okay, nothing really there, to be honest. Gold has not been our friend there, from an example point of view, I'm afraid. But hopefully you can see the process and the logic that we're following. Okay, of course it's very limited analysis at this point, with just support resistance, but as we layer it up day by day, it will come together more and more. So a more robust setup. Okay, how are we doing? Crikey, 11:30 on the dot. That wasn't badly timed. How is that all making a bit of sense? Is everyone following that? Everyone see how we've kind of gone through the motions here of firstly.
Like they will ask for dates when they're available to sit for a meeting, and that's how what's the next step is in a short.
Firstly, we laid out our rules. What makes a good level? What do we need to be looking out for in terms of our golden rules? We've then, of course, looked at how can we strengthen those levels by looking at the reaction of price at that levels. Is it intensifying or is it reducing to increase the chances of bounce or break? We then had a look at how we can trade the breakout of these levels. Okay, we'll look at other setups, of course, as we progress through, but for now we'll focus in on these breakouts, and then we'll hopefully have had a look at a few live examples to get us underway. Okay. Cool. Right, I'm going to wrap up there then, folks. Now, going forward, you have your activity sheets on Canvas. You'll see them at the end of week 1. There's an activity sheet. It will set you a series of challenges. One of those, of course, will be to plot out some support resistance. I would advise all of you to do that, to plot out your support resistance, take some screenshots. Take some screenshots of your analysis, drop it into a Word document, email it all into tutors once you've completed it all, and then we can give you some feedback and let you know if the levels were good, bad, ugly, what you need to work on and improve. Okay, so let's do that towards the end of the week once you've been through trends, trend lines, channels and stuff tomorrow. You've got a more complete picture, but hopefully that at least gets you off and running, gets you started into the world of technical analysis. When you go through the webinars now, the 3 webinars a day, there will always be support resistance demonstrated in those webinars. So take note of how we've done our levels and what we're looking for, and Again, those webinars now will start to hopefully make a little more sense.
S for Sierra.
Okay,
Yeah. Then S for
lovely.
Sierra.
Right, so without any queries or questions, I'm going to wrap it up there. Thank you for joining. Hopefully it's been a useful session. Nice to have my first session with you all. Have plenty more down the road, I would imagine. So I'll catch up with you all then. But in the meantime, as always, any queries, questions, please do let us know, and we'll get back to you as soon as we can. All right, have a good one.